Hello, Uncle Jim here. In order to become a good investor, both buying stocks and selling options, you really need to find the right companies you want to own for a lifetime, not just for earning premium short term, but also for earning dividends over many, many years. So today I want to share with you some of the tricks I use to find these companies. So stay tuned. I think you're really going to enjoy what I have for you today. Okay, now before I jump into the key points of the video, I do want to give a quick market update. It's been a pretty crazy 2 days. The Fed, of course, has increased rates again by a quarter percentage point, and the market reacted pretty negatively. Now, it wasn't really the quarter increase; it was really more what Janet Yellen mentioned, and that deposits over 250 would not be insured above the FDIC, which kind of went against what they said before. I believe they've corrected that today. It's now Thursday, and the market's been kind of up and down today. It started up pretty nicely, and I think currently it's barely up, maybe slightly down. And I think their comments kind of hurt the market and scared people, and the banks have been hit again pretty hard. So hopefully they'll correct those statements and be pretty clear about what they are going to do. I do think they need to insure higher than 250. I mean, 250, I believe, was put in place quite a while ago. If they looked at inflation, it probably should be something more like 500,000. And of course, companies like Schwab, they use Lloyd's of London, and they secure their loans for any portfolio, I believe, over 1 million in cash, and I think it's some outrageous amount like 10 million or 100 million for the portfolio itself. So they do have a lot more protection. So anyone who with less than 250 really doesn't need to worry. And my guess again is the Biden administration is going to come out and correct those statements and let people know that they don't need to worry at this point. So we don't have another run on the banks. And I do think this is the last increase. I personally think the Fed is probably not going to do any more increases, and that's kind of what they announced. They definitely have become more dovish. They did mention they probably in 24 will reduce the rates. So I think that's the route they're probably going to do. My guess is they're going to hold steady. I wouldn't be surprised if they actually lowered the rates towards later in the year, mainly because I think they've done it so quickly, they almost too quickly. It really takes quite a while for these increases to hit the market, not just the stock market, but just the economy in general. And I believe it's hitting pretty hard. I do think inflation's coming down. What inflation can come down, anything related to interest rates. I do believe there's supply side issues, and those are not going to be worked out for a while. I'm not sure you can do much about supply side. For instance, the real estate market, there's not a whole lot of supply in housing wise, so I think pricing in the housing market is going to stay pretty consistent. I don't think it's going to go down much. At least that's my opinion. So with that being said, let's actually jump into the important points now. In my introduction to the video, I had mentioned that what's key is finding the right companies, really good companies. And what constitutes a good company? Again, good revenues. They're increasing their revenues. They're doing better. They're bringing in more profits. They have minimal debt or no debt. I actually like some companies that have no debt, and I talk a lot about that in my videos. And I also like it if they pay a nice dividend and are increasing dividends. And that's kind of the key point of this video. One of the tricks that I found with finding really good companies is using, which I like to invest in it anyway, is SCHD, the Schwab Dividend Growth ETF. And if you actually look at its holdings, and I'm going to share that at the end of the video where we'll go look at some of what they hold in that ETF. Some of those are the best companies you can invest in, and it's a great place to start. I also like Seeking Alpha. I like to look at articles and what people have written, and it's worked out quite well too. It's given me a lot of ideas with different companies, and again, with the market being down, where we haven't hit the October lows, but there are some really good deals out there. There's some good companies that are paying good dividends that in my mind have been oversold, and probably my guess gonna have a revival here before too long and probably recover from their lows. Some of these are actually near 52-week lows or 2, 3, 4, 5-year lows. So, and again, we'll talk about that at the end of the video. So, and then of course, anything I invest in, I like it to be optionable. I like selling stocks, like especially covered calls. So once you own them and you can sell covered calls on it. And if you're not familiar with a covered call, it's just people will pay you for the opportunity to buy your stock. So why not sell some covered call contracts and earn extra premium? I've been doing it for over 12 years. I've been selling covered calls on Coca-Cola and I've done really well with it. I think going all the way back to maybe 2010. So I like what I do buy to be optionable, and that means having enough volume and having enough strike prices, and where you can pick up some good premium too. So those are the key points. And again, I can't stress enough that when you're on both sides of it, when you're selling puts and you're trying to buy stocks you want to own, and you want to own, for me, I want to own them forever. I'll pass them to my son. I'll live off the dividends and the premium from selling covered calls. If you do get assigned, then it's much easier to deal with. If you're being assigned a good company like Cisco or LEG, which again is one of those stocks that's I believe, way oversold, and it's a good value currently. By being assigned those stocks, I feel long term they will recover. And you have to remember, if you bought them originally, say, a year ago and they were at 45, 50, and now they're down to around 30, you would have been in the same boat. So at least along the way, you've been earning premium if you're selling puts. So that being said, let's jump into the next part of the video, and I'll share with you what I typically do when I look at SCHD, and I'll share with you a couple of stocks that I'm looking at currently. So stay tuned. Let's jump into the next part of the video. Okay, now I've opened up my Schwab account online, and I brought up the Schwab US Dividend Equity ETF, which is SCHD. Now this again is one of my favorite ETFs. I think I've owned it for since its inception, and it's done quite well. It's one of my favorites, if not my favorite. You can see it's got really good ratings. It's currently at a good value. It's right around 70. If you can pick it up around 65, which is the 52-week low, that would really be a good price to pick it up at. At its current price, it's right around 3.5%. I believe it's actually a little higher than that. That might not be completely accurate. But if you picked it up at 65, it would probably be closer to 4% for an ETF, which is really good. And again, it grows the distribution almost every year based on the companies that it's owning. Almost all the companies it owns are good dividend-paying companies that grow their dividends. They have good financials. They're able to increase those dividends at a regular pace, and they're fairly safe. They have fairly good payout ratios. So again, the ETF itself is a great security to invest in. Now, what I like to do is I come down and I look at holdings. Now, I'll expand this so I can, if I'm looking for something, say in energy, I can click and look at just companies that are related to energy. I can break it down by what I might be wanting to look at. But overall, just in general, the listing of companies that they provide are some of the best companies you can work with: Coca-Cola, Cisco, Broadcom, United Parcel Service, Texas Instruments, all really good companies, Verizon. And it's a great way to find some good companies. You can just come here and you can look at it. You can sort the list. It sorts automatically by the percent of assets. And this does change from time to time. But overall, almost every company they invest in are good companies. And almost all of them, I think, or maybe all of them, are optionable. So it's worked out really well for me. When I can't find a good company, I will come here and try to pick 2 or 3 that I haven't invested in before and check them out and see if they're pretty optionable and have enough premium to be worth my while. So some of the ones that I'm currently working with, LEG, we can take a quick look at it. It's near its 52-week low, almost. It's right at its 52-week low. It's a good company. It's been beaten down recently because of the higher interest rates and the hit to the housing industry, because it sells household durables. It's still financially has done well. It pays. Let's see, it did slightly miss last quarter, but not by much. And other than that, I believe it met or exceeded expectations every other quarter. And dividend almost 6%. Again, if you can get this at, I don't know, 28 maybe, you would be probably getting closer to a 6.5 to 7% dividend. So this is another good company if you don't own it, LEG, and you're trying to find something that pays a good dividend that isn't real risky. LEG is a great company. And again, I've sold lots and lots of cash secured puts and vertical put credit spreads, probably more cash secured puts. Another great company is Verizon. I own, I think, 250 shares. I'm probably going to add to it to get it up to 300 shares, and probably also sell some puts on it. Another great company, pays a good dividend. It's been beaten down lately. It's pretty close to its 52-week low. Let's see, 5-year. It's also pretty close to its 5-year low, or is at its 5-year low. So um, it's a good safe bet right now if you're selling options and looking for a company to own that pays good dividends and grows those dividends. So you could see it met expectations. It did miss by, what is that, 1 penny. So, and it's got really low PE and close to a 7% dividend, which is unbelievable for Verizon. So again, another really good company to invest in. Finally, let's look at Cisco. I can't really say. Cisco is probably one of my favorite investments. I've done really well with selling puts on it and then getting assigned, and now I'm selling calls on it, and I've done quite well. If you're in my membership, you probably have seen this. And of course, if you want to learn more about my memberships, take a look below. You can link to them. I have two memberships, a $10 monthly membership and a 25. And the 25, I actually do meetings with people. I do one a week, and it's usually around 15 minutes. Goes over. I answer questions. You can ask me pretty much anything you want, and it works out quite well. The other one, you get access to all my trades, also all my spreadsheets. I'm actually looking at putting together some new spreadsheets that pull the information directly from the internet for showing, the Greeks and more details about the stocks. That's something I'm currently working on, mainly, hopefully in the near term, but something else to expect. So if you're curious about any of that, please take a look. And as always, please subscribe, hit that like button. But back to Cisco again. Cisco's a great company. You can see it's rated A. It's 5 stars by most of the companies, four from Morningstar. So again, another really good company. It's done well, especially during this rough time we've had, and it pays a good dividend. I mean, how many technology companies can you earn over 3%? So another great company if you don't own Cisco, another one to look at adding to your list to potentially invest in. Next, it's BKE. This is Buckle. And I've talked about Buckle a lot. They have no debt. They're a well-managed retail company where they sell blue jeans, and they do quite well. Their stores are well run, well organized, and they've gotten beaten down recently. They also pay a really nice dividend. They have special dividends, which can be quite significant. And you can see they have a really low PE, and they've done well. They've beaten earnings recently. And here their normal dividend is 4%, but in some years they double that by having special dividends, and they typically have done special dividends almost every year. So again, another really good companies. That's just to name a few, but again, you can go back to SCHD, you can go through the holdings, and you can find even more. Now, the other tool I like to use is Seeking Alpha. I've got a premium membership. It has really good articles. It allows you to compare stocks. You can actually look at what they consider top rated. And this is based on the members actually ranking the stocks. So you get the SA analyst ratings, Wall Street, and this quant ratings. Not sure how to produce that. But again, another great tool. I use it quite often. I also like to go over to the dividends of top stocks. You can get information about top rated dividend stocks, and I use that quite a bit too. So again, you can see, you can sort by dividend yield, and you can find good companies here too. Another great tool that I like to use, and they sometimes will run sales. I believe I picked up premium for $100 a year. So just wanted to share that. It's been a really good tool for me. So that's it. That's what I wanted to share with you guys. I'm not really sharing my trades this week. I've had some family issues go on, kind of a family emergency, and I haven't had a chance to trade much. I'm still doing really well this month. Hopefully I'll have some time to trade tomorrow. But sometimes life gets ahead of trading, and when that happens, it's nice to have had the ability to earn the options premium as well as dividends. So I have time to do what I need to do, especially when it relates to family. So thanks for joining me. I hope you have a wonderful evening, and I'll see you next week. Bye bye.